I'm looking at something like copper prices, right? Given the threats of 50% tariffs on U.S. copper and, the whole inflationary pressures that we're seeing across, all these certain types of goods and whatnot. But we're not seeing it quite in the data just yet, Bill. Are we going to? And how much sort of inflationary pass-through are we going to see to consumers?
Yvonne, every economist by instinct says tariffs are terrible because they are inflationary, they reduce growth, they're a tax on consumers. All of that is true. But again, remember why it is that President Trump is using this particular tariff instrument. He wants to incentivize investments in the United States, produce more stuff in the United States. If you produce more stuff, that is disinflationary. And remember, the U.S. is a very closed economy. Imports consist about 14% of GDP. Consumers' consumption basket is about 65–70% services, which are domestic, non-traded stuff, and 30% goods. Of the 30% of goods, maybe 25–30% of those come from imports. And you can say there are indirect effects and stuff like that. But if you have even a doubling of the price of imports, the amount that'll show up in the CPI, which is, again, heavily biased toward domestic, non-traded services, it's going to have very little impact because we saw from the experience of the first Trump administration where tariffs went in, CPI went up by about a quarter point over about 2–3 years. That's hardly measurable. That's round-off error.
But is there deterioration, do you think, in the health of the U.S. consumer? I mean, one of the sort of more very micro indicators this morning is the Amazon Prime Day spending, which is down around 15% in the early hours from last year. But, of course, consumers can be waiting for further discounts. What do you make, though, of the health of the U.S. consumer right now?
And that's a great point. When you look at retail sales, you saw that it really slowed down quite a bit in the last month. That's because all these consumers bought the consumer durables and appliances in the months before. But at the same time, if you look at sort of the items that people consume on a regular basis, something called retail control, which is what goes into GDP, that really increased at a fairly healthy clip. Now, no doubt about it, consumption is slowing down from a more unsustainable pace of like 2.5%, almost 3% growth in the last half of last year and early first quarter to a more sustainable pace of about 2% or a little bit less than 2%. So I think there's no doubt there's a slowdown. There's a slowdown in the labor market as well because the private sector just isn't hiring as quickly as it did before. But it's nowhere near below trend. It's nowhere near something that would cause people to worry about recession. And I think the fear mongers have really gone way overboard in saying, oh my God, there's danger of recession, there's danger of hyperinflation, there's danger of stagflation. All the inflations haven't shown up yet, except in soft data. When people are asked their opinions and people are hyped up by a lot of the news stories that, oh, gee, we're going to see more inflation. Yeah, their opinions are saying, yeah, we are expecting more inflation. But if you look at the financial markets and where the break-evens are, that has come down to about 2.25 and stayed 2.25 for almost 6 months. So I think the financial markets are pretty much getting it right. That the inflation surge, if there's any, is going to be hardly measurable. And inflation expectations have really been fairly anchored at 2.25, which is what has comforted the Fed all this time.
Yeah. The market's pricing, 2 cuts now, a little bit more aligned with the Fed. Is that the right sort of pricing, you think, right now, leading up to the end of the year, Bill?
Well, compared to consumer surveys, I would tend to believe the financial markets because, after all, those are where the pros are putting millions and millions of dollars on the line. And when you ask opinion polls, depending on whether it's the Michigan survey, which is heavily biased toward Democrats, or other surveys, again, people's opinions change on the dime depending upon the news stories they hear. And unfortunately, a lot of my peers and my colleagues in the economics profession are telling everybody, hey, you're going to have high prices coming in front of you. You better start worrying. And people start worrying.
Bill, we got to leave it there, but thank you so much. Bill Lee there joining us from Milken, the chief economist and executive director. We got some